Good morning, everybody. Sorry to keep you guys waiting for a couple minutes. I'm just going to give everybody a minute to log on. Got a lot to talk about today. All right, let's see if we can get anybody to pay attention to us today. What do we got? Nikki, Brianna, Johnny. There we go. Thais Collins is in the house. What's up, Thais? All right, guys. We've got a hot housing market. A lot of good stuff to talk about. So I'm just going to go through some of the value stuff that we're adding to our clients and our referral partners, and then I'm going to jump into a lot of really great data. I'm going to give everybody a couple more seconds here to jump on, and then we're going to rock and roll. So, what's happening in our world is like I said earlier, market's moving fast, and we've been, I would definitely say it's the most productive January we've ever had. We did, I think, 5 times as much business this past January as we did last year. Considering everything that's going on in the world, I think that's pretty amazing. Obviously, thankful for all our clients, our referral partners, and my team for supporting us and supporting our clients. We really, really appreciate you guys. All right, last week we announced that we are licensed in all 50 states. So in case you missed it, after working really, really hard for a long time, we were able to announce that we're a national lender now. It's something that I'm super proud of. It's been a big time goal of mine over the course of all this time. And I know my team's really excited. So if you're a client, you want to move anywhere in the United States, certainly we can help you out. If you're a realtor that has clients relocating, whether you're helping them or not, we can help them now. And then, bottom line, if you have friends, family, whatever, we are absolutely committed to delivering the same kind of service that we've been accustomed to, that you're expecting. We're committed to it, we're prepared, and we're excited. So whether you're in the West Coast, East Coast, whatever, we want to help. As you guys know, we are committed 100% to leading with adding value both to our clients and our referral partners. So, we're big into sharing kind of everything that works for us and everything that we think will help add to your business. So if you ever think that you need help with anything in terms of how to grow your business or how you think we can serve you better, just let us know. We are all ears. My team will figure it out, and we will communicate it, to you guys right away. So this week we were talking about Instagram. Obviously a huge topic and a huge source of business for everybody in terms of getting the word out, and then community giving, which is obviously near and dear to our hearts and something that we're committed to and will always be committed to, giving back to the communities that help us. So on Thursday, Nikki's going to be talking about engaging with your clients through community giving. Obviously, she's amazing at it. She's passionate about it, and she's willing to share everything that we've done, we're going to be doing with you guys. This is obviously something we've had a lot of success with, so we'd love to package it up and show you how you can apply it to your business and your community. On Friday, Brianna is going to be talking about using Instagram to grow your brand and show some tips on how to use stories, IGTV, and the new Reels feature on Instagram. And obviously, both Nikki and Brianna are just experts at what they do, and the fact that they're going to be sharing it with you guys, I would please advise you and encourage you to take them up on it. And if you have other topics you want us to cover, just let us know. We have many other topics that we cover. They're in our webinar library. So to register for our webinars, post a link with this video, or you can check out the About section of our Facebook, my LinkedIn, or bio in my Instagram account, which is at mortgagelife_Champenossian. So that's it. We got some people ready to rock and roll, so let's talk housing. We got hopefully about 10 minutes of content here for you guys. So we're going to start with mortgage application data. The refinance market is up. Applications are up 83% year over year. I think that's been a common theme that I've been talking to you guys about. We're seeing cash out refinances. So a lot of my clients are doing debt consolidation and home improvement. We're obviously having a lot of clients lower their rates, eliminate PMIs. Home prices have gone up, but we're seeing people refinance for the second, third, or fourth time just in the last few years. Purchase applications are up 16% higher the same week last year. Last January was off to a hot start. I actually think it'd be even higher if there was more houses on the market. So, just really strong activity. I know the phones have been ringing off the hook. We've started, generally speaking, I've said that the spring market generally starts in February. This year, it started like January 2nd. So overall, if you want to refinance or buy a house, obviously my team would love to serve you. So from our good friends over at MBS Highway, we obviously listen to a lot of their information. We trust them as a resource. So here's some of the information they gave us. So pending home sales, which measures signed contracts on existing homes, they were flat in December, but it was the highest December ever on record. Okay, think about that. Busiest December ever through the holidays, through a pandemic, through the election, all that kind of stuff. We had just overall a great month. Normally there's a slowdown with holidays and traveling, all that stuff. Obviously, there wasn't as much traveling this year. People were really focused on where they're going to live and why they want to live there and what's motivating them. Year over year, this is pretty amazing. Pending sales are up 21%, which is amazing if you think about it, considering we're seeing record low inventory. So inventory across the country, guys, was down 24%. It's down 24% right now than what we're used to seeing. So there's a fourth less houses on the market, and there's more people out there applying for mortgages than ever. Somebody who we also trust and rely on as a resource is Larry Yoon, the NAR chief economist, who I'm sure a lot of the realtors on here know who he is. He thinks home prices, home transactions are going to increase about 15% this year, even with low record inventory, and he's forecasting a 6.6% appreciation in home prices. I think he's being conservative. I think with record low inventory, low rates, and motivated buyers, I think we're going to see more than that personally. We're already seeing it just based on the offers my clients are making. Zillow is being more aggressive with their projection. They're projecting a 10 to 11% increase in home prices this year. So they think we're going to see a big jump in prices. What happened last year, guys, based on what CoreLogic, they released their home price index, they showed a 9.2% increase year over year in home prices. So home prices went up almost 10% last year. That's the biggest increase since 2014, okay? However, I've talked about this as well. We saw, with rates being down, affordability actually increased quite a bit. So I think low rates are just absolutely fuel to motivated buyers. I think you're going to see, with low inventory, home prices keep going up. So right now, if you're curious, what we're seeing is rates in the twos across the board on conventional 30-year fixed and also jumbo 30-year fixed. I think there's a common misconception out there that jumbo rates are higher. We're being aggressive with jumbo rates. We're seeing, just that market's back. I think it slowed down a little bit during right after the pandemic started. Jumbo loans are happening. They're happening at a record clip because we're seeing actually home prices increase. And fortunately, we've been able to do a lot of jumbo business, and that's a loan in most markets over $548,000. In Boston and the surrounding suburbs, it's a loan over $724,000. As a reminder, at the beginning of 2021, Fannie Mae, Freddie Mac, FHA, they all increased their loan limits. So you should get updated in terms of your pre-approvals as to what the new limits are. Why that's important is that makes Fannie Mae, Freddie Mac, and FHA loans available to more people. That's easier underwriting, better interest rates. In general, when we see those increase, we see home prices increase, and we see more people be able to get into the market. And bidding wars are happening. I'm going to talk a lot about that in a second. Some interest rate predictions for 2021. So I talked about them being low, record lows. They've been low. I think they hit 16 lows last year in 2020. So that's what we kept talking about. Every single week, rates were getting lower and lower and lower, and people were refinancing and taking advantage of it. So, we think 2021 is going to be another good year to buy a home due to interest rates remaining favorable. We also think home prices are going to go up. So I think it's important to get in early before home prices go up and rates go up eventually. Rates will remain low, but I think there's going to be a slight bump in rates this year. I don't think they'll, you got to be careful. Just because they're 2.5, 2.6, 2.5, 2.75, whatever, 2 something right now doesn't mean they're going to stay that way all year. I could easily see them bumping up over 3% and then maybe even coming back down. Here's what Wall Street's saying. Wall Street is saying that they will eventually go up due to government policy, government spending, government debt creation to fuel that spending, inflation, and then obviously the vaccine. We're starting to see stage 1, stage 2. The vaccinations are happening, and hopefully they get better at that. Rates wouldn't be this low if the pandemic didn't happen. So when the pandemic is a thought of the past, theoretically rates will go up. However, the Fed, who I've been a big fan of this whole time, has stepped in big. They are buying mortgage bonds at a record clip. They're telling everybody they're buying $40 billion, or they were committed to buying $40 billion in mortgage bonds a month, but they've been spending north of $100 billion a month in mortgage bonds. So that has kept rates super low. And they're also committed to a zero interest rate policy through 2022 and 2023. Obviously, that could change. I don't see that happening. I think rates are going to be amazing in 2021. I think rates are going to be great in 2022. When I say great, I mean 2s, 3s. I think those are amazing, all-time historic low rates. So I think it's important to take advantage of them. That's the bottom line, is like you should be taking advantage of it. If you're a homeowner, you should be considering a refinance. If you did one in 2019 or 2020 early, you should be looking at another one right now because rates have come down further. If you're a home buyer, like I said, all the CoreLogic, Lawrence Yun, Zillow, everybody's projecting home price increases of 10%. So if home prices go up, 10%, and then rates go up 1 point, your monthly payment goes up, on average $300 to $400 to $500, right? So you got to be careful not to wait too long. Think about if you didn't get into the market this year and you've been trying to get in over the last couple of years, how much more expensive homes are. Now, fortunately, rates are down, but eventually we're going to see home prices go up and rates go up. So don't miss out on a really great opportunity. Okay, so we talked about low inventory, low rates, and motivated buyers. So obviously that's created bidding wars, right? So obviously a little bit less competition over the holidays, but January things ramp right back up. I'm talking to some of our agents. They're talking about 20 offers on houses, 28 offers, 29 offers, 50 offers, like crazy numbers in terms of the amount of people bidding on houses. I'm looking at some of these markets. I'll go on MLS and I'll see there's 2 houses on the market in one town, 6 houses in another. There's more than 2 or 5 or 10 people looking. Obviously, that's why you're seeing 10, 20 plus bidding wars. So nationwide, 49.7 of home offers written by Redfin agents, this is the information from Redfin, faced bidding wars in December. That's down from 55% in November, obviously, which is to be expected between Thanksgiving and Christmas. It's the 8th straight month which Redfin encountered competition in terms of bidding wars. The housing market obviously slows down during the winter months. As people enjoy the holidays and get out of the cold weather, but that wasn't the case this year. Home prices increased 13% year over year, December to December, and home sales grew 16.2% year over year, right? So again, motivated buyers, low rates, that's what's going on. Here's some, we're a national lender, so we're not talking about Boston only anymore. We're talking about, or Massachusetts or New England. We're talking about, some of these other states. So here are the most competitive markets in the country, guys. Salt Lake City, 75% of the houses on the market there were in bidding wars. San Diego, 75%. San Francisco, 67%. Seattle, 65%. And Denver, almost 60%. Boston's hanging in there at 47% after pretty much at the beginning of the pandemic and afterwards being one of the hottest in the country in 2020. So in the Boston area and Metro West, we're seeing about 47% of offers being bidding wars. Of those bidding wars, $1 million homes were the most likely to attract bidding wars. Now, you might be wondering why that is. Well, income across the country has gone up in some markets, biotech, tech. So homes listed between 1 million and 1.5 million were the most likely to attract a bidding war, with 60% of offers facing competition in December. We've been talking about loan amounts getting bigger as income goes up, as loan limits go up, and we're definitely seeing massive competition at $1 million to $1.5 million houses. I know I've been seeing that in the markets that I do business in. Homes listed for $200,000 were the least likely to see competition, with bidding war rates going down to 34%. Now, I personally think that's because that's the people that are hurt most by unemployment, hurt by the pandemic, the industries they work in, and then also they're just smaller homes. So, as we're talking about motivated people needing more space, more office space, more bedrooms, more entertainment space, as the price goes down, they become less desirable. So 2 reasons why I think we're seeing less bidding wars in those price ranges. Single family houses were the most likely to attract competition, more than condos. Single families have definitely been the hottest property type during the pandemic. Generally more space, more privacy, more essential features. And that families are working from home, engaging in remote learning, remote work. And condos haven't fared as well, shared amenities, close quarters. I do think personally, as the vaccine rolls out, you're gonna see the city come back in a big way towards the end of this spring and the summertime. I think I've noticed personally this January, the markets in Boston personally and some of them, urban markets have picked way up already, and I'm hearing that from my agents. So I think I think it's a great time personally. If I was looking to buy a condo in Boston, I'd be buying now because I think you can get it at great prices at great rates. But I think you're going to see, those bidding wars come back in the cities pretty quickly. They're already starting to happen in some markets. So I'm going to wrap this up for you guys here in about 5 minutes. So one of the things we've talked about in the past, guys, I learned a new word this year, what a Zoom town is employers are allowing their clients to work from home. People are moving all around the country. I'm amazed when I'm talking to my clients as to where they're considering moving and how fast people are moving. It didn't take long. As some of the big employers have come out and said people aren't coming back in the office anytime soon. Our clients are moving to places that are like their dream locations and a lot of times cheaper locations. But we're seeing vacation towns and suburbs outside of major coastal cities on the rise. There's more space, there's solitude, there's more affordability. So here are the top 10 hottest markets, and we can serve all these because we're licensed in all 50 states. So Lake Tahoe is number one. Chester and Andover, Vermont. We've seen prices in Vermont and Maine personally spike big time. Maine is up 15% year over year, so much more than the national average. Big Bear in California. Stratford, New Jersey, Sebago Lake, Maine, as you're saying, the lake regions in New Hampshire, massive popularity there personally. Again, New Hampshire, Vermont, and Maine have spiked for us massively. Southern Massachusetts, near the water there, Fall River, Marion, like those markets. Washington Township in New Jersey, and then Mountain House in California. So, as I said, those markets are hot. We're doing business there already. We are absolutely committed to delivering the same service. We have the same great products, same execution, all those markets. We've been preparing for it for a while. We're ready, and we're already doing it. So we'd love to help you guys if you're considering any of those Zoom towns. Guys, I've talked a lot about home prices already gone up. Home prices forecasted to go up. Inventory is down. And things are moving fast. So, I want to leave it with, if you're a realtor, what you should be telling your clients and how you should be preparing them. And if you're a client watching this, how you should be prepared. So I think one, super important to sit down and know your goals. It's really easy to, at the beginning of the year, say, hey, I'm going to make a New Year's resolution. I'm buying a house this year. It's really important to know what you want, be specific, know your goals, know where you want to go, when you want to go, and what you need in that house and what markets you're looking at. I personally think you should cast a wide net because inventory is so low. You shouldn't try to pick to one town or one neighborhood within a town. Try to find multiple areas. You'll have more success. I think having an amazing real estate agent now is more important than ever. It's really competitive out there. It's the most competitive it's ever been. There's a huge difference between a part-time agent and a full-time agent that has access to coming soons, off-market inventory that can help you negotiate in a bidding war situation, that's going to tell you when to not negotiate and when to negotiate, is going to have great relationships in terms of attorneys and inspectors and lenders. So in my opinion, the tougher a market gets to buy in, the more important the real estate agent becomes. We know a lot of really great ones, so if you don't, we'd love to put you in touch with them. Do your research, ask them why they're so great, ask them what their experience is, ask them how they're going to work for you and how they can separate themselves, but it's super, super important. As a client, you should be prepared. First thing, as I said, guys, some houses you have to be prepared. You can't wait until the weekend to get pre-approved. Some houses are only sitting in the market for 1 to 2 days. So know your budget, know your down payment, know your max loan amount, know your comfort zone, know your monthly payments, know your down payment options, know your closing costs, know the different types of loan products that are out there. You got to know all those things before you even look at a house, in my opinion. Be ready to move fast. Loans are closing quicker than ever. The average turn time on an application to closing date is a week faster than it was last year, okay? And so, get all your documents in. Ask your lender, what is everything you're going to ask me for once I have an offer accepted? Get it in up front. I will help you get your offer accepted if I have all your stuff because I'll be able to close that much quicker and I'll be able to communicate to the agent that my client is ready, prepared, and fully committed to this whole process. This is important. So low inventory, low rates, many buyers, home prices are being sold. A house is going on the market. A lot of them are going way over asking price. I'm seeing clients $50,000, $100,000, $150,000 over asking price. So one, you got to get emotionally and mentally prepared for that. It's not easy for a lot of people. Everybody thinks they should never pay more than a house is on the market for. Anybody can list a house for whatever they want. A lot of times these houses are listed intentionally to create a bidding war. So you need to know that this is going to happen. Talk to your agents about it, know what your budget is and know what your numbers are. How much does that increase your payment? What are you willing to do? What is your max pre-approval amount? So you also must know that the house may not appraise. There's not a lot of comps out there. So what does that mean for you? Does that mean you have to bring more cash to the table? That's sometimes the case. Other times, there's different loan products out there with higher loan to value restrictions where you don't have to bring more money. I have a lot of clients consistently that are surprised that they don't have to bring more money in the case of an underappraisal. There's other options like paying PMI, taking out a home equity line, taking out a product that has a higher loan to value requirement. So, just because you're paying something for a house now that it's listed for more than what it was, you're buying it for more than what it's listed for, it doesn't mean that it's not going to be worth way more next year and way more over the course of time. So I think a lot of times getting in now while prices are lower and while rates are lower is super important, but being prepared from a numbers standpoint financially, but also emotionally and mentally is super, super important. And you got to make sure you can handle this market, right? So knowing your details up front is important. So the great news is lots of deals are happening. Like I said, even though there's lower inventory, there's more transactions happening than ever. It's just moving faster. So we have a lot of really happy buyers that are getting offers accepted. I know it can maybe sound overwhelming or be overwhelming thinking about it, but a lot of people are happy winning offers. Every single time there's a bidding war, there's a winner and somebody's buying a house, and most of those people are getting mortgages. If you're a seller, obviously a great time to be listing in a low inventory market. So overall, it's a great time to be in housing. I'm excited about it, as I think you guys can tell. I hope I hit you guys with a lot of really great, valuable information today. I hope everybody's out there staying safe. I hope 2021 is off to a great start for you guys and that everybody's being safe and healthy. I appreciate you guys. Thanks for all the support and have a great week.